is really happening with the market here in Collingwood, Blue Mountain, and the Southern Georgian Bay region as a whole? Well, if you stick around to have a look at the 5-year comparative market analysis that I'm about to show you, you will be incredibly surprised to see exactly what has happened over the last few years that have been quite crazy and all over the place, as well as how it compares to 2018 and 2019 before things went sideways here. So this is the Southern Georgian Bay Comparative Market Report for 2022. We have a lot here to show. If anybody wants a full copy of this, I can send it through. You look at the left sidebar here. I can send you a digital copy of this. Just reach out to me by email or direct message on our social media channels. But there's two specific pages that I think are really important to go through. And I'm going to start here with this, with the year over year with the last 5 years to look at these graphs. This first one here is the dollar volume sales. As you can see here, 2018, 2019, 2020, 2021, 2022. And it's only when you compare all of these years together that you really see what is happening, because what we felt over the last 6 months was on the heels of what happened the 2 years prior, that no one really knew what was up and what was down and where this market was going, with 8 interest rate hikes in the last year and such. But to look at this really tells a story. Let's start here with these sections right here. So these lines are the 2018 and 2019 dollar volume sales across the year for Southern Georgian Bay. A regular rise up towards the spring, sometimes a little dip in the summer when the kids get out of school, a little bit of a spike here in the fall, and then back down to end the year. Now, those were two very good real estate years, but now we get into 2020, where we kind of started off a little bit high, as you can see here, dropped into nothingness, really, when the world shut down, spiked up as the doors began to open, and then dipped down again as the doors began to close at the end of the year. So that's an anomaly year. This is anomaly dollar volume sales. 2021, again, we spiked at the beginning of the year, like incredibly high dollar volume sales over a normal year. And then tailed off, a little slow in the summer, a little spike. So we started to see some normalcy in the pattern of the numbers in 2021. And then what you'll see here, which is the most amazing news, is we spiked here in 2022 with our dollar volume sales, again, much higher, by $100 million higher than a normal quarter one. And then by the time we got into starting quarter 3 and quarter 4, you'll see here that the sales dollar volume leveled off just as it was in 2018 and 2019. Now, the last 6 months of last year, we thought the sky was falling. It feels to everyone that the market's down. It's bottomed out. It's the worst of the worst, but it's only comparing it to this height of the market that we had for dollar volume sales back in the first quarter of 2022. So this is really, really great news for our market. I'll see if I can drag this little guy over here and just highlight really what I'm talking about. This section right here really shows that for the last 6 months of last year, we were back on track for a normal dollar volume sales market as it pertains to the 2 years prior to the pandemic hitting. So this is glorious news for us. The next part of this data center that I want to show you is this right here, which is the unit sales. So what's interesting is that our unit sales are very, very different now because our average sale price is very different. So this tells a story as well, and this shows other glorious aspects of how we have gotten into a very balanced state by the end of 2022, and now off to a great start in 2023. So let's look at this again. 2018, 2019, you can see them right here. They're normal years, all clustered in here. You can see 2020 dips down, spikes up, and then dips down again in unit sales, and finishes the year in sort of a normal range of sales. Spiking up again from that normal range to start 2021, and dipping down into what would be normalcy and a balanced market. And then here what we see, which is very interesting, is even though the dollar volume sales were very similar as we got into the last 6 months of 2022, we spiked a little bit at the beginning of 2022, which we thought was really, really high for sales, although the prior year was much higher for unit sales. It was just this part here in 2022 was really high for dollar volume sales and average sale price. Then we dropped off and we spent the summer a little bit low compared to what would be 2018, 2019, a normal year, if you will. And then by the end of the year, we reached back to normalcy in terms of what the normal unit sales will be. So this is actually quite brilliant for our market. It's given us a great start to 2023. Now, when the numbers get released month over month for January and February, what we're going to see is optically, they are terrible sales months year over year, because January and February and March of last year were such incredibly high unit and dollar volume sales and average price sales. So the important thing to recognize is the optics is it looks bad because we're comparing it to the unicorn months of sales. The reality is we're back on track. You can see by these 5-year graphs, we are back into a normal, balanced way of selling real estate in this region, just at a higher average sale price, and right now at a higher interest rate than we were for the last couple of years. But if we go back to 2018, the interest rate was between 3.5 and 4%, right? So not much higher now than it was then, but very high versus what it was a year ago when you could get a mortgage for about 1.1%. Maybe you could get it fixed for closer to 2%. But we're getting back into the normalcy, the acceptance. We're seeing some patterns. So this is all very, very good news. Again, if you want this whole data set to be sent to you, I can email this to you. But before we finish this off, I want to get in just a graph just to show sort of where the market sits here overall. If you go back to 2018 and 2019, you'll see right here that most of the sales in our market were happening in the $300,000 to $500,000 range, right? Almost 100 each year in this range. 2022 as well, we saw that change. We saw that drop considerably in the last couple of years based on the rising prices. And what we saw was 861 sales go down to 136 sales, and being down 84% from where we were. And then we're seeing the most number of sales is in this category here, the $500,000 to $800,000 sale prices, which is now 610. Right, so we've seen a 31% increase in this price point because of our average sale price rising, and this continues as a pattern all the way down. When we look at how the sales would decline here as we got into the higher numbers, 13 sales between 1.5 and 2 million, 16 sales above 2 million, and when we go over here, we went from 13 sales to 105 sales in 2022 that were doing between 1.5 and 2 million. And then we have almost 100 sales, up 500% from what we would have seen here in 2018, which is exceptionally high prices. We've seen them level off a little bit, but we have seen the average price rise and hold, even though we are down from what we were a year ago on average sale price. We are up overall year over year, especially over the last 5 years. But this is another really important thing to look at here, is that going from 94 sales in the 800 to a million to 360, up 280, and going from 65 sales in 2018 in the million to million five to 326. So now the main category of sales we're seeing in our market is between 500 and 1.5 million is the bulk of the sales, whereas before the bulk of the sales were under $500,000 by a long shot. So when we see the average sale price go from 500 here to just shy of $1 million over here, again, this is the entire region, so you'll see the Blue Mountains a little bit higher, Collingwood's a little bit lower, Meaford's a little bit lower. Remember, we trade in 2 counties and 6 municipalities here, so they're all a little bit different. But overall, we saw the average sales price basically double. Last year, at this point in time, we would have saw the average sale price around 1.1 to 1.2, so we are down from that. But this shows the numbers as a very strong market, a growing market. Demand remains here, and going back to finish us off on these graphs, this is what really tells the story here, is that by the end of last year, we saw the dollar volume sales fall right into line with 2018 and 2019, and that shows exceptional numbers and exceptional things for us in Southern Georgian Bay going into 2023. Chris Keleher from Keleher Co. If you want all of this data set sent to you, if you want to have a Zoom call to talk about this and break down what's really happening in the market and get rid of all the buzz that's out there and the optics that would make it seem like we're having a bad start to this year compared to last year, we have got right into normalcy and balanced area for our market, and we are looking forward to an amazing 2023.